is my accounts receivable balance healthy? It's very tempting to look at your balance sheet and see accounts receivable balance of $106,000 and think, hey, everything's going to be okay. Got plenty of cash to pay my bills. There's nothing to worry about. But I highly encourage you to actually take the time to look at the actual report. This report is an example out of most accounting software packages. You can ask your bookkeeper or your accountant to print a copy for you. I actually encourage you to export it out to Excel if you can. When you're first learning how to read this report, when you look at it from a percentage standpoint, it can really help you with some of the math, have easy relationships between the columns and the amounts. So in this example, notice how 66% of our total is in the current column. This is very healthy. This means that the majority of your customers don't really owe you money yet because they haven't hit the terms of the agreement. Also notice how when you move all the way to the right to the over 90-day column, it continues to decline. And so we've only got 2% that's owed to us that's severely past due. This is an example of what you would want to see on your report. The majority is in the current and it steadily declines. Ideally, you'd love to see 0 in the over 90-day column, but hey, it happens to all of us sometimes. And so you want to see a very low number in the over 90-day column. And then also, I love to see when we do have a list of customers that owe us money, I like to see that the customers we're not reliant on one particular customer owing us a whole lot of money. Ideally, you would like to see 15% or less when it comes to looking at the individual customer account. When you get over that 15% mark, you're starting to get into a danger zone because you're becoming very dependent on that customer for your cash flow needs. Here is an example of a storm is coming. And when you look at more than 50% is in the 31 to 60-day column, you still have time to fix the problem. Usually what's happening with this is someone is probably cutting some corners in their procedures. They're not collecting. They're not staying on top of it like they should. And you need to get on the phone. You need to dust off those procedures and start making collection calls. And then meet with the person that's in charge of collecting and ask them, are you starting to hear any unusual new excuses? So you just need to pinpoint, is it internally a procedure has failed and that's created this problem? Or has something changed with your customers where they're starting to find reasons and give new excuses? Either way, you need to start figuring out what the problem is so you can fix it. So that way you do not have a severe cash flow problem. If this doesn't get fixed, the majority of the money might be in danger of where you cannot collect it, and then you definitely cannot rely on it to pay your bills in the future. Here's an example of an unhealthy report. Notice how the majority is in the 61 to 90-day column. This is very dangerous. The majority of the money that you believe is coming in so you can pay your bills, the majority of it is severely past due. It is possible your business will not collect some of that money, so you cannot automatically rely on that number. And it gets even worse if you have the majority, like 66%. This is severely dangerous, where you've got all 3 of the far right columns are showing past due amounts. And then it gets even worse when you've got one particular customer that owes, 20%. When you have a very short list of customers that owe you a lot of money, then that can turn into a dangerous situation. So it's the combination of how many customers owe you money, also how long has it been since you provided that service. A healthy accounts receivable report looks something like this. If your reports look like this, then you can rely on that balance. But every now and then you do need to actually look at the report to ensure that all of your procedures are being followed in your business. Thank you so much for watching.